Welcome to the Value Investor channel.
Welcome back, investors. This video is the first part of a series of videos about the gaming industry and more specifically the valuation of its big players. Before moving forward, if you like this channel, obviously do not forget to like the video and hit the notification and subscribe button below in order to receive my weekly updates. And as always, reminding you that this content is for informational and educational purposes and it's no way a solicitation direct offer to buy or sell the companies that I'm discussing in the Value Investor channel. Alright, so let's get started. So in the first gaming industry analysis, we're going to be looking at Nintendo. But first, I think it's important that we set the scene about the gaming industry. And the gaming industry, in fact, and it actually surprised me as well when I was doing the analysis, it's the largest media category by revenue, and if you look on the graph here, you see that it has become bigger than linear TV, and even it's bigger than global music, film and on-demand entertainment sectors combined. So it's a huge industry, and you see that the growth trajectory is pretty steep, and we're going to discuss this. So if we look at 2020, the estimated total revenues from the gaming industry were around 160 plus billion of US dollars. And in this graph, you see the split. I've put the source here is from Pelham Smithers with the analysis. So you see that mobile has been picking up a lot. PC continues to grow despite a lot of people saying, yeah, PC is dead. What we clearly see is arcade is really going close to zero. And the console business, which is pretty, let's say, constant since a decade or 2 decades. When we look at the big market players, obviously the first one that crosses our mind is Tencent, so this Chinese conglomerate, which, if I'm not mistaken, half of its revenues are coming from the gaming industry in the meantime. So they do own brands like League of Legends, Dungeon Fighter, Honor of Kings, Peacekeeper Elite. Then we have Sony, obviously, with the PlayStation hardware, but also brands, very well-known brands like Gran Turismo, Spider-Man, Crash Bandicoot, God of War, Ghost of Tsushima. Nintendo, that's the one that we're going to be analyzing today. They obviously have some hardware like the Switch, the Wii U, but they have also some strong gaming brands like Mario, Zelda, Pokemon, Animal Crossing, Donkey Kong. Then we have Microsoft in position number 4, so with obviously the Xbox hardware, and then also some very big brands like Forza Motorsport, Halo, Minecraft, Flight Simulator, etc. Activision Blizzard, those are the 5th ones. I mean, when I was younger, I was playing a lot World of Warcraft, so they have Overwatch, StarCraft, Diablo, Call of Duty, Tony Hawk, Candy Crush. Then on position number 6, Electronic Arts, they have huge brands there like FIFA, Sims, Need for Speed, Madden, NFL, NHL, and they have actually acquired recently, I think it was early 2021 or 2020, the UK brand Codemasters or Studio, and by that they have been acquiring Project Cars, Grid Dirt and WRC, which is a rally game. Epic Games with Fortnite, Rocket League, Gears of War, Take-Two, pretty well known for GTA, Red Dead Redemption, NBA, PGA Tour, Sega Sammy, which is a little bit less known, and I think recently they have been announcing collaboration with Microsoft. So they have the brand Sonic, so they still weigh 2.3 billion US dollars. And then we have the French-based gaming company called Ubisoft, where probably you know some of those brands like Assassin's Creed, Watch Dogs, Tom Clancy, Just Dance, Far Cry, and Prince of Persia. So remember, in 2020, the total revenues were around 165 billion US dollars. And if you just add those top 10 together, we are already at 106. So you see, it's pretty consolidated on the top with the top 10 big players that we have here. 2021, I mean, if you have followed my courses online on Udemy or Skillshare, you know that I'm not the biggest fan of doing predictions, but nonetheless, I wanted to give a perspective. What are the expectations for the industry moving forward? So the expectation is that the industry will grow in 2021 to 180 billion more or less. And analysts are actually estimating that the yearly growth will be around 9% until 2024. So it will grow to beyond 200 billion of revenues. One other thing that I'm watching, I mean, I have 2 kids, so I'm watching what they are doing and discussing with them as well, is the esports part. So we have today around 2.7 billion gamers worldwide, and the esports is becoming a bigger, let's say, sub-industry inside the gaming industry. And we see that the growth has been there over the last year, so it has been growing at a pace between 5 and 10% since 2019. And the estimation of the market analysts, again, I'm not the biggest fan of trying to make predictions, but is that it will grow at a compound annual growth rate of around as well between 5 and 10% for the next half decade. On the esports, probably you know what the biggest brands are, like League of Legends, Counter-Strike, and Overwatch. One of my boys, or one of my kids, which is my boy, is playing Overwatch. So going into Nintendo now. So Nintendo, you probably know them through their hardware. So the Wii U and the Nintendo Switch, those are their most recent hardware devices. And then I took the example of a couple of strong gaming brands like Zelda, Mario, Pokemon, and Animal Crossing. So what we're going to do here is we're going to be looking at the valuation of Nintendo. What is its valuation? And we're going to use the tests that I typically use as a value investor. Then I've been using this for the last 20 years. But we need to set this up. So first of all, Nintendo, they are listed on the Tokyo Stock Exchange. The ticker name, number, because it's on the Tokyo Stock Exchange, is 7974. And we already see here, I try to extract from their latest annual report the number of outstanding shares. So they currently have 131 million of outstanding shares, but from those 131.6 million of outstanding shares, they carry 12.5 as treasury shares. So those are the shares that they have been buying back. So what we say, the shares that are really being available on the market are 119.1 million of shares. So for those who are interested, and it's not the purpose of this video to explain to you the rationale behind all of those tests. If you're interested, go on my Udemy or Skillshare channel. I'm sharing the link in the description of this YouTube video where you can do a full, it's a full day training, in fact, on the art of value investing, where I'm explaining all those tests. But what we're going to do here is apply that method of those 3 categories of tests and see what the outcome is specifically on Nintendo. So first we're going to start with the fundamental screen. So first of all, is Nintendo a blue chip? Well, obviously it is. We're going to see that later on, but Nintendo is a very well-known brand. So obviously it ticks let's say the principle that well-known brand is a blue chip. But we're going to discuss this later on when we're going to discuss the strength of the brand. So the second test in the level 1 category is, does Nintendo provide 5-year earnings consistency? So I went on the Nintendo investor relations site, and they do provide also some nice graphs, and we do see indeed that over the last 5 years the revenues of Nintendo have been growing. So they nearly tripled the amount of revenue, but also profits over the last year. So definitely from a income perspective, the figures look good. The profitability is positive. They have always been writing positive numbers. If you look at it from a cash flow perspective, you know that I'm also a big fan of looking at cash flow. We do see that the operating activities are definitely very positive, and so the cash flow is also positive. So their operations are able to provide the necessary amount of cash to cover their investing activities. So all in all, the 5-year 10 earnings consistency is a pass. So we clearly see systematic increase in cash flow and earnings. The third test in the level 1 category of the fundamental screens is, if we would buy today, are we buying Nintendo at a price to earnings ratio that is below 15, if not below 10? And when I did this, so it was, we are actually November 8th. So I've been doing this and looking at the quote on the Tokyo Stock Exchange. And currently the quote was at 49,260 yen. So you need to divide this by 113. Currently that's the exchange rate between yen and US dollars. And you divide it by the profits, and so by the earnings, which were 480 million yen, and you divide it by the number of outstanding shares. So you do not take the 131 million, but you take away from that figure the treasury shares that Nintendo has been buying back. So all in all, we end up in a price to earnings ratio of 12.22. So it's a pass. So it currently looks cheap with the current amount of earnings. Next test is we're going to look if there is a consistent 5 to 10 year return to shareholders. So again, it's not the purpose of explaining this here. Please go into my training on Udemy or Skillshare to understand this and how I'm building this up. But basically, when we look at return to shareholders, we're looking at free cash flow to equity. So we're looking at share buybacks. We are looking at dividends or any kind of return that is going back through scrip dividend, cash dividends to the shareholders. So again, here I've been looking at the investor relations side of Nintendo, and we do see that Nintendo is paying out a dividend, and the dividend has been growing from 430 in 2017 yens per share annually to 2,220. So they actually multiplied the dividends by nearly 5. And the cash flow from financing activity, we do not have enough details here. It looks like the cash flow from financing activities is increasing, but we need to understand what is linked and what is behind the financing activities. Again, we'll not explain in this video, it's not the purpose, what's the difference between the operating, the investing, and the financing activity. But basically, in the financing activity, you can find debt reduction, so payments that are there to reduce the debt, outstanding debt of the company, but also potential return to shareholders. So for this, we need to look at the cash flow. Unfortunately, when I look at the Nintendo investor relations side, they do not provide the detailed figures before 2019. So I took the cash flows of 19, 2020, and 2021. And we do see, and you see it here in the red circles, we do see that they have been doing actually in 2019 a pretty big amount of purchasing treasury shares, so 31 million of yens. Remember, divided by 113 to convert this into US dollar, it's nearly the same ratio for euros. But you see that in 2020, 2021, there has not been consistency on the treasury share buybacks. But on the dividends, you see, and this is what we were seeing in the previous graph, you see that the amount of dividends being paid back has been increasing. So it was 78,000 million of yens, and in 2020 they paid 108,000 million of yens, and in 2021 they actually paid 194,000 million of yens, which is huge. So we see this is being confirmed that they have been increasing the return to shareholders. So we can say it's a pass. The next test that I typically do before investing into a company is I look at return on assets, return on equity. So here I have been using the balance sheet. So because this is calculated first of all on the balance sheet. So you need to know your earnings. So this is what I call the NOPAT, the net operating profit after taxes. You have the total assets, and this gives me a return on assets. So you see that the company has been increasing profitability over the last year. So it went through a return on assets from 7% to 19.6%. And the return on equity, which does not include liabilities, has been growing consistently and at the same pace from 8% to 25%. So pretty decent figures, I must say. So this is a pass for me as well. And in the same sense, looking at the balance sheet, one of the things that I like to look when investing into companies is I would like to have the company not too much debt compared to equity. So and this is one of the things that surprised me when I started analyzing the gaming industry, and you're going to see this in the next videos as well. I was in fact surprised by the amount of cash that those companies carry versus liabilities. In fact, those companies, the gaming companies, nearly all of them that I've been analyzing, they nearly have 5 to 10 times the amount of cash versus debt, which is incredible, and it's nearly one of the only industries where we have such a situation. So we see that the industry is not very capital intensive, and they have huge amounts of cash that they can deploy to potentially buy smaller players. If I look at the example of Electronic Arts buying Codemasters in the UK. So we need to look at the balance sheet to calculate the debt to equity, and we do see that the debt to equity is in fact below 1, so it's at 0.3. So Nintendo carries 3 times the amount of equity versus the debt, which is fantastic. So it's an absolute pass on this one. So at current stage, this company cannot go bankrupt because of the debt. So level 1 tests, you see that all of them have passed through. So we go now into level 2 categories. So we start with the price to book. So price to book, we are looking at the balance sheet as well. And we would like to buy, even though normally you buy a company for its future streams of revenue, and this is what we're going to do in the future earnings model and free cash flow to the firm. But basically here on the price to book, you are evaluating the price that I pay today versus what the assets are worth of the company after having removed the debt. That's why we are speaking about price to book or price to equity. So when you look at the price, so currently the price is at 49,260 yen. We divide, in fact, by the total equity, which is 1,861,582 millions of yens, and then you divide it by the outstanding number of shares, which is 119, so after treasury shares, and we end up at a price to book of 3.15, which is pretty cheap, in fact. So the test is basically, if it is below 3 or below 1.5, the company is currently undervalued, and this is basically what this test is telling me. Then, and again, go into the course to go full detail and get full details of what I'm going to be discussing here. But basically those companies, or at least the companies that are part of my investment universe, I do look at their intangible assets and the brands that they look into. So if you have followed my courses, you know that my investment universe are the 100 top brands in the world plus the 60 largest brands in the US and Europe. And basically here I was looking into what's the point about Nintendo. And Nintendo in terms of brand is currently in 2021 on number 70 of the top 100 brands in the world. And you see on the left hand side in the interbrand listing that the brand has been growing by 26%. If I look at the best Japanese brands, it moved from position 10 to position 8. So we consistently see that the brand of Nintendo is growing. And currently today, the company is carrying the brand valuation at 12,000 million of yens, if I look at the intangible assets. And basic, so that's around 113.5 million US dollars, while Interbrand tells us that the brand is worth between 7.3 and 9.3 billion US dollars. So you need to compare those between 7.3 and 9.2 billion of US dollars with the 113 million. So the balance sheet is understated, and part of my methodology is to reevaluate the balance sheet and recalculate and do what I call an adjusted price to book. So actually I'm adding the brand value. So I'm kind of adjusting the balance sheet. And when I do this calculation, so it's the same calculation I did for the price to book, but now I did it by adding the intangible asset that is worth 904,000 million of yens. So what the brand is worth, so I've put 8 billion US dollars, more or less, multiplied this by 113 to end up at 904 billion yens, or 904,000 million of yens. So I come up with the price to book, which is 1.49. So the company looks cheap currently with what it's worth, even after adjusting the brand into the intangible assets. Free cash flow to the firm, that's definitely something I look into. So, I mean, you have the Excel file. If you have done my trainings, I do the calculation here with those variables, with some growth assumptions. And currently at 49,260 with an expected return of 6%, with growth assumptions of 10% for the next 10 years, 5% for the years 11 to 20, and 3% for the years 21 to 30, I end up at an intrinsic value to earnings and to cash flow that is in fact 3 times the current purchase price of the share. So also here the free cash flow to the firms is telling me that if those growth assumptions are let's say respected in the future, and based on the current income and the growth on that current income, the company is undervalued as well. Last but not least, level 3 category test. So there I'm looking at more the mode and the intangible metrics. So first of all, brand positioning, we already discussed it. So you see that in the top 100 brands, we only have Sony and Microsoft which appear before Nintendo, but Nintendo as being a pure gaming player is actually listed on spot number 70 out of the top 100 brands in the world in 2021, and the brand is gaining value. It has gained 26% versus the previous year. Japan, I already shared this with you. Also there, Nintendo is one of the largest brands, so it went from position number 10 to position number 8. Another thing that I look into, I always consider that people are willing to pay premium prices and to continue to buy from a brand if they are happy and satisfied with the brand. So for that, I look at the Net Promoter Score, and there indeed the current Net Promoter Score that I can find on the internet for Nintendo is 43, which is a very positive one. You see it on the bottom. I think only Starbucks and Honda and Gucci have, but you clearly see that Nintendo has a very strong brand and customers are satisfied by Nintendo. Then last but not least, I'm not looking at the external Net Promoter Score, but also at the internal one, how internal employees are happy about the company. And for that I use the glassdoor.com website, and there it looks like that Nintendo has a 4.1 overall score, which is pretty okay. 84% of the employees are recommending Nintendo to friends, 100% of the people are approving the CEO, and the positive or the business outlook is positive for 69% of the people. When I compare this with peers, so the peers would be Activision, Blizzard, Ubisoft, Electronic Arts, and Take-Two, we see in fact that Ubisoft and Activision have less good scores compared to Nintendo. Nintendo has more or less the same score than Electronic Arts, and only Take-Two has a little bit higher score on what I call employee promoter score. So with that, wrapping up here, so you see, and if I kind of summarize my analysis on Nintendo, it definitely looks cheap. The only thing that would hold me back from buying it today as a value investor is that when I invest into companies, I definitely like to have at least 4% after taxes amount of dividends, and currently I only reach 3% pre-tax. So that's not enough for me, but that, again, that's my investment style. I'm not telling you what to do, but otherwise, if the price continues to go down, or if the earnings grow and the dividends grow, Nintendo is one of the companies I will be monitoring, because I believe that they pass all the tests with the exception of my test, which is having dividend yields above 4% after taxes. So thank you for your attention. Do not forget that I have a couple of trainings on the Udemy and Skillshare platform. You can find them in the description below. Hope you will learn further things from me, and I hope that this kind of video is valuable to you. Thanks for tuning in, and see you.